right, let's jump into some money questions. And if you have a money question, it's easy to get it to us. You just go to christianmoneysolutions.com, click on the show tab that's right up at the top, fill out the form that's on that page, click submit, boom, you're done. That's all that you have to do. Shelly sent us this question. She wrote, my husband and I are trying to figure out our life insurance situation. Do we both need life insurance, or does he just need life insurance since he makes most of the money? We have 1 3-year-old right now. Shelly, thank you so much for getting this question to us. It's a really good question. He definitely needs life insurance, but you also may need a smaller policy. Okay, now here's why. Assuming that both incomes are needed to support the household, if you were to pass, and obviously we hope that that does not take place, but if you were to pass, then that would require him to make up the difference, to bridge that gap while he's mourning the loss of his wife and trying to care for a 3-year-old child. So let's just assume, okay, that he makes $70,000 and you make, $30,000. So it's $100,000 total. If you needed the full $100,000 to operate your household and you were to pass away, once again, we hope that that doesn't happen, then that means he would have to figure out, in order to keep things going, he would have to figure out how to earn an extra $30,000 per year, once again, while mourning the loss of his wife and trying to raise his 3-year-old child. So that's a difficult situation to leave him in. So I do think that you're probably going to need some type of smaller policy. So we recommend something called the DIME method to determine how much life insurance you need. DIME stands for debt, income, mortgage, and education. So debt, you want to make sure that you have enough to cover all of the outstanding debts that are out there, all the debt balances. Then you have income, and we do recommend having enough in that enough life insurance to cover 10 to 12 times whatever your annual income is. Mortgage, enough to cover the mortgage, to pay that off. And then education, we recommend having at least $100,000 per child included as a part of that death benefit. And so that's the amount that we recommend if it is financially feasible. If it is financially feasible, then my recommendation for you, and I'm going to just operate on that $30,000 number. I know you didn't give me your income, but I'm just going to assume that it's $30,000. If it is financially feasible, I would actually have both of you with the same amount as determined by the DIME method, except for the income part, because his income would be that times 10 or up to 12, right? 10 to 12. And then yours, assuming that, let's say it's $30,000, would be, $300,000. And so the income portion would be less. Now, once again, that assumes that is financially feasible. At a minimum, you need to make sure that you have a life insurance policy that covers your portion of that income for 10 years. That will go a long way to helping with that transition, because it's a massive transition when you have a spouse pass away. And so that would be a significant help. Now, generally, I recommend term life. I think that's going to be that tends to work best for most people. It's going to be a cheaper option there. So you certainly want to look into that. But yes, to answer your question, I think both of you need some type of life insurance policy. So if one of you were to pass away, then the other spouse and the child would be taken care of. Shelly, great question. Thank you so much for sending that in. If you want any additional advice on this or need additional guidance, of course, you know where to reach me.